I can't believe it. I was muted the whole time right there. I guess I hope you guys can hear me now. I didn't see that the mute was on, but it is on now. So what's the rundown for today? Here's what it's going to be. The rundown is going to be we've got a major disaster happening in the Eurozone, and it's specifically coming from France. And I think that that disaster is going to cause the European Central Bank to have to turn on the money printer over there. All right. You guys, okay, you hear me now? Okay, great. Right. How to be a professional YouTuber, episode number 30. Well, as I was saying, yes, I think the European Central Bank is going to be the one that has to turn on the money printer first. Also, I think that there is one possibility. I asked about this, and I tried talking a little bit about this when I was on Crypto 7 stream yesterday. Is there any chance at all, that the United States never turns on their money printer, that the Federal Reserve never does money printer? Is that in any way possible? I got one way in which that could be possible. I'll outline that for you just so that we name the monster in the room and you are prepared for the worst case scenario. But the real big story to get to today is the GDP by state numbers that just got released. All right. So we'll get into all of those. Hi, RH Max. I'll see you there in the chat. Yeah, maybe one of these days we do StreamYard. I mean, right now Rumble treats me very good. They've made everything like very user friendly and easy for me to set up, and it doesn't cost me anything either. Like I looked into StreamYard, and like they want to charge me to stream. I'm like, no, you guys should be paying me to stream, and that's what Rumble does, and that's why I use them. So maybe one of these days I switch over, but as of right now, I'm cheap. All right, I don't want anybody to think that I'm like this premium YouTuber that makes a big production out of everything that he does, because I really don't even consider myself a YouTuber. I don't even like using YouTube anyway. Don't even like YouTube. Rumble treats me better, but I got to be on YouTube just because that's where the audience is. Now, for today's stream, let's start with the stuff that we usually look at first here. Start with the usual statistics and everything. I mean, this here is actually the top story. We'll get into this here first thing, but before we do that, let's talk about what's happening in the markets. We're having a killer day today here. Look at this. Bitcoin has reclaimed 120,000, and it got really close to 121,000 earlier today, so it's just about 3% away from its previous all-time high. Let's take a look at Ethereum here. That one is outpacing Bitcoin with its growth. It is doing almost 4% on the day and 15% on the week. That's really good for Ethereum. Still, it's got a lot more room to grow. I think that it's still going to have a tough time getting over its $4,900 all-time high for a little bit longer. I mean, right here, it's kind of beating some heavy resistance at 4,500. I think it'll have a tough time getting to 5,000 for just a little bit longer. But I think when the Bitcoin dominance starts to go down, that's when Ethereum's really going to shoot up. If you didn't see me on Crypto 7 yesterday, definitely check that stream out. It was like what we talked about is how I think first Bitcoin dominance is going to go up, and it will go up for, I'm not showing the screen either. Oh, come on, man. Got to be a professional YouTuber here. All right, here we go. Finally got the screen shown here. Yeah, was totally not prepared for today. You can tell from like how I'm having like a totally bad hair day, as you can see. And today is a bit of an emergency stream here because like I just found out about the main story for today, and it's not the GDP numbers by state, but actually the disaster that's coming down in France, and I think that that's going to be the thing that gets the real bull run going. Because what we're looking at here, all this green that you see on CoinMarketCap, I don't even consider this to be the real bull run. I don't really even consider this to be the real bull run at all here. I think this is rookie numbers compared to what this place is capable of. I mean, just looking at Crow. I mean, Crow, like we like it, but we don't really like it. We only like it because like we know that Trump is going to be investing a lot of money into it, and he hasn't put any of it in yet. It's only up 10% on the day. I think in the real bull run, you're going to see this thing double on the daily. And also with those stablecoin ones like Hyperliquid and Athena, and then also EtherFi. I mean, EtherFi, this is very respectable actually for that one at 25% on the day. But looking at Athena and looking at Hyperliquid, for them to be like just where they're at right now, just 11% on Athena, that's rookie numbers for them. Like they're capable of so much more. And Hyperliquid, of course, they're capable of so much more. I mean, even with though they got competition from Aster, I think that Hyperliquid probably going to win that fight. I do think Hyperliquid will win that fight about the perp dexes because nobody expects it. Just like how nobody is expecting anything good out of Pulse Chain and Hex. And that's why I think they're going to perform incredibly well this cycle. And it's going to be like the most hated rally from all the haters out there. But man, when they perform, it's going to completely blow everybody else out of the water. I'll be like, whoa, how in the holy heck is that thing doing so well? Speaking of those coins, we should scroll down and take a look at them. Sonic ecosystem is still kind of like below its main resistance right here. But like when this thing passes 30, well, then I'd consider it like back in play. Right now, it's still got a lot of work to go. Let's look at like the Pulse Chain Hex ecosystem here. It don't look all that great right now. And really, EHEX is still the main star. We did talk a lot about this on Crypto 7 yesterday. We talked a lot about like the EHEX thing and like why you really don't want to write it off. You don't want to fade it because there is a lot of power still left in it. So what's causing a little bit of red here on this? I don't think there's any real particular cause to this right here. There's no major news in the ecosystem that should be like freaking people out. You know, there's not like some whale tearing through this or anything. And you know what I heard from Johnny Chaos the last couple of days here is that BankX was really nothing to worry about because they were better hodlers of EHEX than most of the other people that ever had EHEX. And what we can see here is that even now the BankX is almost out. They only got like $15,000 worth of EHEX left. Even though that they're out, still EHEX is holding on and doing a very good job of like holding its ground here. So, yeah, these numbers don't look great. I see you there, Digital Donkey. Yeah, these numbers don't look great. But we got to remember here is like, man, it is still pretty far from over. It's way early. And really, the star right now is going to be EHEX. Because you got to think of it like this here. Is like the easiest one to buy is the one that's on Ethereum. And the one that's going to get the most attention right now is going to be the one on Ethereum. The reason for that, why is that the case there? It's just because all of the money right now is on Ethereum. All of the attention is there as it gets to be closer and closer to Ethereum's time to shine. So I don't expect the Pulse Chain ecosystem to pop off for a while. I think that happens much later in the bull market. I think it happens much later in the bull market. I don't think it happens right now. So don't lose hope yet. And also, I think that this ecosystem is going to be the most unexpected rally. It's going to be the most hated rally. But it's going to be one of the most powerful rallies throughout this entire bull run as it comes along. On CNBC, the important stories here today, this is something I keep saying here, is that the real bull run, it might take a long time to get going. And my thesis, I reaffirmed it yesterday with 7. I said, hey, I think it could go all the way out till June 2026 before the real bull run begins. This story is a big part of the reason why. Check this out here. You know that the Trump administration wants to get rid of Lisa Cook on the Federal Reserve, on the Board of Governors, because then Trump gets to replace her with one of his own picks, and it would be somebody else that is like Stephen Mirren, somebody else that believes in the money printer like he does. But they can't get rid of Lisa Cook here. It said the Supreme Court, it is going to go all the way to the Supreme Court. The hearing is not till January. And the Supreme Court says, well, she can stay at her post until the oral arguments begin, we don't think there's any conflict of interest there. So she's going to be on the board of governors up and for the next 2 meetings this year. And let's see, they don't say when the oral arguments begin in January. They say that they begin in January. So we don't know if she'll be on the board for January's meeting either. Very well could be a possibility. So far, she hasn't been a hindrance yet to the rate cuts. But really, I think the rate cuts are not as important as the quantitative easing, the money printer. Money printer is much more important than anything they do with these rate cuts, and that's going to be like what really gets our bull market going and what really pumps our ecosystem. We got some stuff here to say about the DXY, the dollar index today. It kind of ticked back up here. Ticked a little bit back up here on, let's see, the overall. You see it better here on the monthly. Because it was down to 97.70, and then it just went up to 97.888. Not a big move here. But yeah, I got a lot to say here about the DXY as far as why is it weak? Because it's not weak in the sense that they're printing more dollars. Because this isn't necessarily a measure of inflation, and it's really not a measure of purchasing power of the dollars so much as it is a measure of how strong is the dollar against other currencies. And there's another currency out there that we're going to talk about today that has been stronger, a lot stronger than dollar bills, has been getting stronger. And that's why you had this decline throughout the entire year, where it was up at 110, and now it's down in the high 90s. It's not because the dollar necessarily lost much purchasing power. It's more so because a particular alternative currency out there got a lot stronger. We'll get into that a little bit later. Interest rates, how they doing? Well, 10-year Treasury is still above 4%, and I think it's going to stick there for a while, probably up until the next Fed meeting. We got another month here of 4%. It could come down a little bit more after that. It could come down to just like 4.01, and then I think after the Fed meeting, it'll be about 3.9 something, and it'll be there for a while. Probably till the end of the year. So I'm not expecting too much action here on the interest rate side of things. And because I'm not expecting too much action on the interest rate side of things, I'm not expecting too much action in the overall crypto market. I see Tam, my number one cheerleader, has arrived. Hello, Tam. Now, a little bit of housekeeping here. If you want a free copy of this book, it's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice, I will be happy to give you a free copy of this book. All you have to do is head on over to my Substack. That's reinventideal.substack.com. That's reinventideal.substack.com. Everything is free. It costs you absolutely nothing to subscribe. You head on over to my Substack and you click here where it says free gift. And then you click down here where it says subscribe. It costs you absolutely nothing, and then I will send you an email with a free copy of this book. So that's my little giveaway to you as a way of saying thank you for watching the stream. Now, if you saw me on 7 yesterday, what you saw is I gave away a free copy of this book to a very lucky viewer. And I tell you what, anybody else that you want to have me on your stream, that's what I'm going to do here. I will give away a free copy of this book to one of the viewers that you choose. It could be the one that puts the wittiest comment in the chat, or it could be the one that gives you the most money in a super chat, and they will get a free copy of this book here, Decrypting Crypto. What this book does is it teaches you why the crypto cycle happens, why the coins go up, exactly what is it about crypto that makes the coins go up each time. So that way, when your friends ask you, hey, you know that crypto thing that you do here? I'm really interested in it, but I don't understand it. Could you explain it to me? And then you just, you read this book and you can explain it to them. Or what you can do is you can say, hey, here's a copy of the book. You read it. because the analogies in here are so rich and they make so much sense and everything is so thoroughly explained that they go, oh my gosh, it makes sense to me here. I'm so glad that you shared this with me. I'm going to go invest some money in crypto now. And then they become filthy rich and they thank you for it because you're the one that opened their eyes. So that's this book, Decrypting Crypto. Just pay attention to when I'm on other streams because you could win a free copy of this book. All right. Now, what are we going to talk about today here? Anybody see the new numbers that came out from the Federal Reserve's blog? Kirill, I see your question there. I'll save that for a moment. I'll save that for the end probably. But yes, the Federal Reserve finally brought out the Q2 numbers for GDP growth by state. Now, last time that we looked at these, it was pretty bad. Like GDP growth by state, you had 48 out of the 50 states, or not 48, 39 out of 50 states had negative GDP. But here, we've got a much better picture to look at. It's 47 out of 50 states had positive economic growth in Q2 of 2025. What does that tell you? I mean, like, first off, do you believe these numbers? Because I know a lot of people are going to have a really hard time believing these numbers. A lot of people will have a really hard time thinking, well, how can we have good GDP when half of all young adults are living at home with their parents? How can we have positive GDP when you got more people than ever searching for search terms like help with mortgage or how do I get a second job? Or, when the jobs market is sucking as much as it does right now, how is there positive GDP in all of this here? And I'll tell you, here's a big chunk of what's going on here with this. It's like, I don't think the numbers are fake. I think the numbers are misleading, though. Because, yeah, I do believe in all of these numbers here. I do believe in, let's see, Florida is at 3.26%. That's my state. And, of course, they would do pretty good in Q2. They would do really good in Q2. Texas, now they are generally a good economy overall, 6.76%. The real winner, though, was North Dakota at 7.3%. What's causing all this here? Now, the one I don't believe, California at 4.3%. I do not see how California is getting any economic growth at all. The median, though, was 3.5, and the national average was 3.3. The worst performer was Arkansas. They contracted by 1%. Mississippi was the other one, and then DC was the other. So I do believe that these numbers, for the most part, are correct, but I don't think that it tells you the whole story, because the reason Q1 sucked, well, who was still in charge in quarter one? Who was running the country back then? It was still Joe Biden and his administration. And even though Trump got inaugurated on January 20th, I think it was late January. And don't think of this as me saying, oh, it's because Democrats suck and Republicans are awesome. I'm not saying that. But you got to remember, it was like, when they make the transition, the transfer of power, it's not everything all at once. See, first, Trump gets sworn in, but then you still got all of the Biden people from the Biden administration and a lot of the agencies all around. You have to first, you got to get them all kicked out, or you got to get them all to resign, and then you got to get your people confirmed through the Senate. That all takes a long time. It took a long time to get the Treasury Secretary Scott Bessent confirmed and in his post. Took a couple of months, or at least 2 months for that. It took a very long time to get Paul Adkins to be the head of the SEC. I remember that took at least 3 months before that happened. So yeah, it makes sense the Q1 sucks because you still had the old people in it. And then Q2 was better because you knew by then, well, the new administration would be all settled in. What else is going on in Q2 is that they knew the tariffs were coming on April 2nd, all right, Liberation Day. They had already planned ahead for it, and so they bought everything back in Q1. A lot of these companies, they bought all of their imports back in Q1, and they had the shelves stocked. Now, that didn't make it a very profitable quarter for them because they did a lot of buying, more so than usual. But because they planned ahead, that made Q2 better for those companies, and they could do more. They could do more positive things for themselves economically. So that's where I think these numbers come from. I do think the numbers are padded, though. I don't think that these numbers are totally totally accurate in the sense that, like, it doesn't mean everything is okay and the economy is all good from this point on. It doesn't mean we have avoided any sort of recession or any sort of downturn. I don't believe that. Because another thing to worry about here is in the numbers that you see presented here, a lot of that is also going to include municipal spending. State and local governments, they issue bonds just like how the U.S. Treasury does. The U.S. Federal government issues bonds. The municipalities do that too. And when they issue the bonds and they raise the money from it, a lot of that will take place in the first quarter, and then they finally get around to spending it in the second quarter. So I think that this also reflects a lot of municipal debt spending. You see, in these numbers, like, they do back out the debt to GDP at the federal level, but not at the municipal level, because that's just way too much work to do. It'd be impossible to track down every little piece of debt taken on by every single municipality in the entire United States. It's just not feasible for a Federal Reserve study. Also in Q1, a lot of growth is restricted and possibly contracted because that's when people are doing their taxes. The taxes are due April 15th, but the first 3 months of the year is when people do their tax planning. And when they're doing their tax planning, they're saying, oh God, I owe all this money. They're not running around spending that money like crazy. But then in Q2, that's when they get their tax refunds, and now they got money to spend, and you know what they do is they go splurge and piss it all away. I mean, can't blame them. You know, when I get a bunch of money, you know what I do is I go over to American Eagle and I splurge it all there. All right. So that's the story here on the Q2 numbers. We waited a long time here for these, and we're going to be waiting a very long time for the Q3 numbers. That won't come out until, I think, next year. Probably not till next year was when those will come out because of the holidays. They're going to delay them further. All right. Now, what we want to talk about here is what I said on Seven's show yesterday is that I still think the money printer is going to be a very long time before it goes off. But there's also a possibility in a very freak universe situation that the Federal Reserve never turns on the money printer for the next 4 years. I mean, at some point, they're going to have to turn it on. Like, there's no getting away from this. I mean, this is what Lynn Alden calls fiscal dominance. She says nothing stops this train. What she means is the amount of debt that the federal government is racking up is going to be so incredibly high, there is no way in hell we can never turn the money printer on again. There's no way in hell we can get away with never doing quantitative easing again. And for those that are probably wondering what I mean by money printer, I should probably bring this up and show you this here. Hang on, sorry. It's going to be this chart that we see here. This is the Federal Reserve's balance sheet. This is what I am referring to when I say money printer at the Federal Reserve. This is quantitative easing. The way it works is the Federal Reserve will print fresh new dollar bills and use those dollar bills to buy government bonds like treasuries, sometimes corporate bonds, and sometimes mortgage-backed securities. They use that, they take those assets out of the investment markets that the public can invest and consume and put it on their balance sheet, and they hold those assets to maturity. That's considered money printing because, one, they printed the money to buy it, but then also, two, it adds more money to the circulating supply of dollar bills in our economy. And those dollar bills need a place to go. And typically, where those dollar bills end up is in financial assets like stocks, like crypto, real estate, you name it. Financial assets is usually where the printed money ends up. Because you look at this here, just the amount of money printing they did in 2020 and 2021, there is not enough stuff in the U.S. economy to take in all of that money. There's just not enough stuff out there to take it all in. So where does that money end up? Where does it go? It goes into financial assets. People save it and set it aside. Now, is there a scenario where for the next 4 years they do not turn on the money printer? You see, I think that there's a chance they turn it on in the next 12 months, but I think the earliest it happens is going to be June 2026. And that's why I say, well, the real bull run doesn't start until June 2026. Because by then you have Jerome Powell out, or at least not chairman of the board anymore. You probably have Lisa Cook out. It's going to take that long to get her out. It's going to take that long to get rid of her. But once you have all of that handled, when you have those people taken out, and then there's also some elections for the presidents of the regional banks that sit on the Federal Open Market Committee for the Federal Reserve and determine the money printer. Once all those are over with and you got replacements in, by that time it's probably June of 2026 already. And by that time, you got enough people in place with enough votes on the board. You need a 4-vote majority on the Board of Governors. You need a 7-vote majority on the Open Market Committee. When you have all of those, then they can turn on the money printer. The only way it happens sooner is if there's a major disaster like a recession in the United States, because that's what caused this one here in 2020. All right. So what is a scenario, though, where it doesn't happen for another 4 years? Because that is possible. And the scenario as well is, what if the Supreme Court rules against the firing of Lisa Cook? It's not good. What if Jerome Powell, when he steps down as chairman of the Federal Reserve, he decides to still stay on as a governor? If he's a governor, I mean, he has no love or loyalty for Trump, so he could just be another opposing vote on the money printer. So if you got both Lisa Cook and Jerome Powell staying on the board, we're going to be stuck with quantitative tightening. We're going to be stuck with high interest rates. Or what if they do get one of them off of the board? What if they do get one of them off? But it's already pretty late in the year. Like, it's after the midterm elections. So you got to do this before the midterm elections, because if it's after the midterm elections and the Democrats win, they're going to block everybody that Trump tries to appoint. They're going to block everyone. So it's very important that they get this stuff done quickly, that they get Jerome off of the board quickly, or at least get him to step down from, he's going to have to come May of 2026, because that's when his term as chairman ends. But it's really important that they get Lisa Cook out of there as soon as they can, while you still got a Republican-controlled Senate. And that way, Trump can appoint somebody who will get confirmed, or because he has the Senate to do his bidding. All right. Yeah. Silver's Raleigh, you say stealth QE, keep buybacks with banks. SLR down, no balance sheet movement needed. I mean, QE is a balance sheet movement. If you want to clarify your comment there, then please do there, because whatever you do on the balance sheet, if it's going up, that's QE. If it's going down, that's QT. Now, another thing I pointed out on the show for 7 yesterday is that if you look really close here, real close, since September, it appears they stopped tightening, because it stops going down and it even goes up. It doesn't go. That's really not enough to call it quantitative easing. But it's great to see that they stopped tightening for a full month. Hopefully that continues and it stays flat. Maybe it stays flat for the next several months, and if that's the case, that's good. That's really good if it stays flat. We call that steady maintenance, steady state maintenance. It's not quantitative tightening. It's not quantitative easing, because the last time they did that was during the year of 2017. You see it right here. It stays pretty flat the whole time. That was the 2017 bull run. A big chunk of that was due to the fact that the balance sheet at the Fed stayed flat. Now, there was money printing all throughout the rest of the world, and that's what caused Bitcoin to go up. It could have gone up a lot more in 2017. It could have gone all the way up to $30,000 then, had the Federal Reserve done some money printing. But the fact that they didn't do any tightening until the new year turned over in 2018, that's why the bull run lasted throughout the entire year of 2017. So if they stay flat like this, that's not as great as them increasing the balance sheet, but it's still good. It's still an overall net positive for us in crypto if they do that. All right. So is it possible that they don't do that this time, that they don't do any quantitative easing? In a rare scenario, that rare universe where like they just can't get rid of Lisa Cook, at least not until after the midterms. If they couldn't get rid of her until after the midterms, or they couldn't get anybody else to step down, and they couldn't get their people on the board of governors, then yeah, I don't see any quantitative easing occurring for another 4 years, or at least not until 2028. All right. Jim Horton, I see your question. Don't worry, I will answer that. So, even though if the United States Federal Reserve does not turn on the money printer, there is still going to be another money printer that's going to go off and is going to push this bull market up. There's another money printer out there. This is something that I just recently discovered, and it's a huge story to me. Nobody else is talking about it with the exception of Arthur Hayes, because he's who I heard it from. That's what we're going to talk about next. First, a little word from our sponsors. Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible. All right. So now we get into the main story. And y'all can keep throwing your questions in the chat. I will read them before we end the stream. Here's the main story. I don't know about you guys, but I really like French culture. Not so much the French people and not so much France, the state. Don't really care much for France, the country, but French literature is something I really like, you know? Like the Three Musketeers and Man in the Iron Mask. See, those were all products of France. Yeah, Phantom of the Opera is a play that I was actually in. That takes place in France. An American in Paris, of course, that takes place in France. An American Werewolf in Paris, that takes place in France. So yes, I really like a lot of French things. French fries, French toast, brioche, all those things. I'm going to really like France if what I think is going to happen happens, because it appears France might be the catalyst that gets the bull run going. Remember how I said, if there's a disaster, well, then it doesn't matter if Jerome Powell and Lisa Cook don't want to do quantitative easing. If there's a major disaster, it's going to have to be done any damn way. It's just like the 2008 crisis, or it's just like the global pandemic. You got to do it to save the world, because if you don't, the whole world goes to crap. There is a potential disaster that is brewing right now, and it's coming from France. Now, are you familiar with, a lot of us aren't, because they don't teach us this in school, and I can see like why they don't, because there's really nothing that useful to know about it here. The French Revolution, that started the Fifth French Republic. This took place in the late 18th century, just after the American Revolution. All right. And so like the American Revolution, like we don't really have a lot of movies about that. I noticed that. Like the Mel Gibson movie, The Patriot, is really the only movie out there about the American Revolution. Anybody know of any other ones? Because I really like the story of the American Revolutionary War, but there really aren't that many movies about it. And I think I know why. I think that the reason why they didn't make that many movies about it is because, one, a lot of movies are shot over in the United Kingdom. So are they going to make a movie over there that shows like, hey, here's when America whooped your butt? I don't think that's going to happen. And then two, even though like the Brits were our enemy in that war, they weren't evil. You see, that's the thing about like the Patriot. They make them look like very bloodthirsty and evil. None of that's true. It's like when we fought Germany in World War II, absolutely those guys were evil. Or when we're fighting the Confederacy in the Civil War, absolutely the Confederacy was evil. But when you look at the Brits, they weren't evil. They're actually the most polite and honorable opponent that we've ever faced in war, because for the most part, they made it very easy for us to defeat them in battle. All they did was they just lined up, take one shot, reload, all out in an open field. They're reloading while we're there able to shoot them and everything. It's how gentlemen fought, and that's the way that the Brits would fight wars. They wanted to fight like gentlemen. So they made it easy on us, and it's hard to say that they were really a bad guy. It's hard to say that they weren't evil. Wasn't any of that. And like the peace negotiations between John Adams and King George III went very well. Were very smooth and everything. If you saw the movie or the TV show John Adams, you see that like King George was actually very gracious to us. So right after the American Revolutionary War, France decides they want to have a revolution as well. And when France decided to do that here, it really kind of set Europe's political structure and its economy ablaze. And it's going to happen again right now. Because you got to remember, who's in charge over there in Europe? It's not Keir Starmer. It's definitely not Emmanuel Macron. Who's really in charge out there is a person I like to call the Countess Karen, because she looks like a Karen with her short white hair. She's slithering around in Frankfurt. I'm talking about Christine Lagarde. She's part Karen, part banker, all nightmare. Because you see, here's the deal with her, is that she's in charge of the European Central Bank. She's basically the European version of Jerome Powell. And if you take a look at her, she actually looks like the female version of Jerome Powell as well. So here's where it gets like really juicy here. Like the French equivalent of Independence Day here in America is what they call Bastille Day. And it's actually 10 days after Americans' Independence Day. That's not an accident. It's kind of like the universe is playing a joke on us. But that's when broke as hell the French royals that were already one bad harvest away from being looted and rioted against from the peasants, they decided to bankroll tax-dodging America because they wanted to give a middle finger to King George III. They said, well, let's pour some gold into the colonial tantrum because that totally fixes our finance. But it didn't. Now, when you fast forward to today, we're kind of going through the same thing. Except instead of bankrolling the United States, it's really kind of the other way around, where like France only exists because of the United States, but the French are still being equally financially irresponsible with the money that they do have. So here's kind of how it plays out. There's about a real seismic shift that's about to occur in global foreign policy and global monetary policy. And I think that it could force France to either get out of the Eurozone, have like their own version of Brexit. I guess you'd call it Frexit. I don't think they'd call it Frexit, though. They'd call it something else. But there's a chance that like they ghost the euro, or the ECB, the European Central Bank, will be forced to bail out France. Because when we look at France, you can't just let those guys fail. All right. Now, when we look at here in the United States, when I see all the shenanigans occurring in California, when I see all the shenanigans occurring in California, and then when I see all the wildfires out there, I'm just like, let it burn. Now, we can't do that. We can't do that, though, because it is a very huge piece of the American economy. So, of course, even though Trump doesn't want to help out Gavin Newsom, he has to, because of how big California is to the economy. Like, if we lost California, GDP would go negative. France is kind of the same thing for the entire Eurozone. It's basically the California of the Eurozone. Get into like some details of that. I mean, first, what you got to know is that the euro is this currency that's supposed to unite a bunch of countries out there in Europe. And it's a piece of trash. It's a trash currency. But it has been gaining strength. In fact, it's stronger than US dollar bills right now. But I'll tell you, like the Europeans, they can't wait to dump it. Or at least the French, they can't wait to dump it. They would love to dump it. It sounds like a bold idea. And they have been predicting the euro's demise. They predicted it about 10 years ago, back during when there was a banking crisis back in 2012. But the problem was that the countries that wanted to dump the euro back then, they were small countries like Greece and Portugal, the usual suspects. But the Eurozone has two big players in it, and these are the two players that are kind of keeping it afloat. And that is Germany and France. You can think of them as being like the sugar daddies of the Eurozone, because they're all bought in on the euro. And what they did was they cranked the European Central Bank's money printer to get rid of the crisis that the Eurozone faced in 2012. But that was just a temporary fix for what's otherwise a very terminally ill patient. But this time, what you have is the two big dogs, Germany and France, pulling in opposite directions. Let me show you exactly what I mean here. Now, this chart that I'm going to show you. Let's see, where is it here? Where is the chart? Hang on. I'll show you this chart here. It might look a little blurry, but don't worry. I'll make sense of it here for you. There we go. Check this out. So what this chart is kind of representing here is the two countries that are pulling away from each other. If you're like me and you were a fan of wrestling back in the 90s, think about the time where you had Hollywood Hogan in the NWO black and white, and then Kevin Nash in the red and black NWO Wolfpack. When the NWO split up, it was Hogan and Nash going head to head with their two factions of the NWO. That's kind of what this is like here between France and Germany that's happening right now. And instead of splitting up the NWO, they're going to be splitting up the entire Eurozone. Now, we're not the only one that knows this here. I mean, the people in French, like the very few people in France that are saving money right now, they know what's happening here too. And that's what this chart shows. I mean, what they know is that France is headed for, at the very least, a soft default on their debts, maybe even a hard default. And they really don't like that. And so they're taking their money out of French banks. We call that capital flight. So what this chart shows you here is these are target balances between the national central banks of each country in the Eurozone, the target balances of the national central banks compared to the European Central Bank, or the ECB. All right, and this goes all the way back to 2020 up to the present day. Now, right in the middle here, this flat line right here, this is what they call the target. And what they mean by target here is there more money coming into the country or is there more money leaving the country? You see, everything that is above that line, that represents that more money is entering that country in the form of like bank deposits or foreign investment. We call that a positive target balance. So that means that the national central bank of that country has a net claim on the European central bank, and that shows that more funds have flowed into its banking system that left it. That's good. That means that we're a good country, that is a nice, safe place to invest. Everybody loves us. We're responsible. We don't act like a bunch of jerks. We don't piss away money. We don't set barrels of money on fire. We treat our investing public with respect. We treat our taxpayers with respect. So everything you see above the line in the center, all of those countries, those lines, that's a positive target. Those are countries that are behaving financially. But everything that's below it, that's a negative target. And what that indicates is that this country is a net liability on the European Central Bank because more funds have left that country than entered that country. Capital flight, payment outflows. This white line that I've made like very pronounced here and everything, this white line that you see that's going nowhere but down, that's France. So you can tell me here, like if you're looking at this and you're thinking, oh, who's the big jerk here that is the least productive employee or the most disruptive kid in the classroom or, I don't know, the bitchiest bitch in your harem? That's what this white line is. That's France. They're a net drag on the overall Eurozone. All right? Every day, they net out the capital that flows in and the capital that flows out up against the ECB. I can't they don't get too detailed here with this, but you see it's detailed for them enough to see what country is a asset to the Eurozone and what country is a net liability. So how you want to look at this here is like the target, that's the Euro Savers vibe check. When there's a positive balance, they can say, oh, my money is safe in that country. I can park it there. And when it's negative, they can say, oh, no, that country is a piece of trash. I'm definitely not going to put any money in that country. So France here is clearly a piece of trash when it comes to, are they a net positive to the Eurozone or a net negative? They're clearly a net negative. And this is going to cause a lot of people to pull their money out of French banks already and do more capital flight. I mean, you see it's already happening here. It's going to get worse as people get wise and start looking at these charts. He goes, are you going to stash your money in a country that's going down like this? Of course not. Now, France, what they could do is they could leave the Eurozone, or the Eurozone could kick them out. And then if they do that, well, then France has to create a new currency. They would create a new version of the franc, because that was their currency before the euro. Now, is that going to be a valuable currency against what's left of the euros? And like, if you're a European, where do you stash your money? You're going to stash it in the one that appreciates. You're not going to stash it in the one that's depreciating. So which one would appreciate in that scenario? It's actually very hard to say, because so much of the Eurozone is made up by France that if France left, well, that's not good for France. It's also not good for the Eurozone. It's kind of like if you're a very uneducated, very down on your luck, have no leg to stand on, no hope in hell, woman that ran away from home. Like when you turned 18, you ran away from home because your parents were abusive. And then you married the very first man that said that he loved you and everything, and he turned out to be equally as abusive. And you're financially repressed. He doesn't give you any money, so you got no access to money and everything. You're really trapped in your own home. He treats you like trash. But you got to stay there, because if you run out on your own again, you're going to starve. Or you guys live in the ghetto, so if you run out on your own, you wander the streets alone, you're going to get assaulted, or who knows what else, all manner of bad things. But also, if you stay in this really bad relationship, life is still going to suck because your spouse is abusive. That's what France, that's the relationship France has with the Eurozone. All right, now how does Germany play into this here? Germany plays into this here because they always have, for the most part, a positive target. They're always a net asset to the Eurozone. The Bundesbank has inflation under control. And everybody in the Eurozone loves keeping their money in German banks and investing in Germany because they're very good at staying on top of their financial shit, for lack of a better word. If they ever left the Eurozone, they could go back to their old currency, the Deutschmark, because that thing would roar back stronger than a hangover at Oktoberfest. That's how powerful the country of Germany is for the fact that they got their stuff together. And that is where you would see them. That's where you see, I think it's the green line up top. That's Germany. And the white line down there, of course, that's France. So this is what I mean when I say the two dogs are pulling in different directions. That's like Hulk Hogan or Hollywood Hogan in the NWO black and white, and then Kevin Nash in the red and black pulling away with the Wolfpack, causing a split right down the middle of the NWO. That's exactly what this is like here. All right. Now, why is it like this? Like, why is France sucking so bad? I mean, before 2021, they were very well behaved. They were in a surplus. They were a net positive to the Eurozone. But since 2021, they've been sucking. Why is that? Well, it's because welfare. It's because France's welfare system is one of the most generous in the world, and France's economy, for the most part, is running and depending almost entirely on welfare. I did a stream a while back where I said, if the United States stopped deficit spending, that would actually cause GDP to go negative. That would make us have negative GDP of negative 6% for a couple of quarters, and that would cause a panic. And everybody would be like, oh my God, it's a depression, which is why they'll never cut down on deficit spending here in the United States. They'll never do it, I don't think. France, it's just like that, but it's much worse. It's like that exact same system of a snake eating its own tail, but a snake eating its own tail on steroids, on crack, on heroin. That's how bad it is. And it's because France has one of the most generous welfare systems in the world, which I can actually show you here. Hopefully you guys can see this, and I'm sure the text is very small. But this is just some examples here of the very generous welfare that they give. It's a wide range of benefits that it will support a household against social risks like aging, like illness, unemployment. And of course, that all is well-intentioned. That's all great. But it's also a drag on the economy because there are people that abuse this. There are people that take advantage of it. And then also, once somebody goes on welfare, they get used to it, they get comfortable with it, and they never come off. I had an argument like this once with my sister, who is the biggest welfare parasite in the world. Nobody should feel sorry for my sister, because I remember one time, she'd been on food stamps practically her whole life. I remember one time, the food stamp office made a mistake, and they doubled the amount of money on her SNAP card. And she was so happy and giddy about it, celebrating, like, oh yes, I got twice the amount of money on my SNAP card. That means I can work less hours this month. And that just threw me into a rage. Was she ever grateful for any of this? Of course, my sister was never grateful for any of the welfare that she got. She was always complaining and bitching about having to go down to the office, the social services office, and constantly reapply for this stuff. And was always bitching about it. And I just said, well, why don't you just go get a job? That sounds a lot easier than all the work that you're putting in here to do all of this applying for welfare. And of course, what she said was, well, I can't do that because if I get a job, I'll lose my welfare. So you had a perfectly able-bodied woman that completely crippled herself with welfare. That's what happened that's what's happening with France on a national scale. And you can see it here. The costs are expressed in terms of GDP. You got things like, your retirement pension, which is like their version of Social Security. That takes up about 14.4% of their GDP. So if you got rid of that, already they'd be in the negative. Their healthcare system, they got a public health insurance system. I don't know if it's single payer, but it's pretty close to single payer. That's 11% of their GDP. If you got rid of that, then it would go negative. There's family and children benefits. That's about 3.5% of their GDP. There's unemployment benefits. That's 2%. And then there's disability benefits. That is 2.5%. So if we just add all of this up here, $34% of their economy is welfare. All right. 34%. And this isn't even all of the welfare here. This is just the most I could find easily. The welfare I could find most easily. They can't get rid of any of this. There's no way that they can cut back on any of this, because if you try cutting back on this, you're never going to win an election again. So this is going to continue indefinitely, and it's going to keep widening France's public deficit. Here in the United States, we got a pretty bad deficit. They got a worse one over there in France because they just can't get rid of any of this. And they never will. So, since they're stuck with all of this welfare, they're going to have to keep spending. And because they're going to have to keep spending, eventually the country is going to become absolutely insolvent. It's unsustainable. And the few people who save money in France, the few financially responsible people, they're bailing. They're voting with their mobility. They're voting with their wire transfers. They're saying non merci to the French domestic banks. And then they're saying bonjour to Germany and Luxembourg and their banks. That's capital flight. So money is leaving the French banking system and going to Germany and Luxembourg. And when that happens, the French economy has less money within it to tax and fund all of its welfare goodies. And the smart money is seeing this, and they're saying, oh my God, it's time to scream fire in a crowded theater. So because France clocks the largest deficit in the whole Eurozone, and it's the number 2 economy, it has a debt load taller than the Eiffel Tower, and it's seeing a silent bank run that's happening right now. It's not a glitch. Because you see, this disaster here is every bit as bad as the GFC was to the United States in 2008. This thing is going to blow, and it's just a matter of time. This is the Euro's canary in the coal mine. The really big problem is that France is too big to fail, but also France is too big to bail out. Or at least it's too big to bail out without turning on the ECB's money printer. You're going to take the European Central Bank and you're going to turn it into a full-on money volcano to save France. So if you've been questioning yourself about whether crypto is a good investment or not, let this be your reassurance that crypto is, in fact, the right thing for you to be invested in, because the money printing that the Eurozone is going to have to do, the amount of euros that the ECB is going to have to print, that's going to flood the world and increase global M2 is going to be enormous. I'll show you some estimates that I've got here, but it's a lot. It's trillions. And remember, Cairo's Law. What's Cairo's Law? Anybody remember what it is here? If you do, throw it in the chat. Tell me, what's Cairo's Law? I mean, somebody's got to know what it is, right? I'll give you a hint here. It's got to do with global M2. All right, and you're going to want to write this one down. You're going to want to commit it to memory here, because this law is going to be what helps you determine when a bull run has begun and when it has ended. Seems like none of you know here. I'll give you a few more minutes. All right, Top of the Roost has got it. M2 money supply. Here's what it is. Cairo's Law is the backbone of all bull runs in crypto is global M2 growth. Every bull run that we ever had, in fact, every bullish move that we ever had, including in HEX, was corresponding and correlated to an increase in global M2. Now, that doesn't mean that there can't ever be a divergence. I showed you divergences between global M2 growth and Bitcoin. But those divergences don't last very long, and when they end, Bitcoin shoots right back up to catch up and correct itself. All right, because you hear about corrections to the downside. Well, the market had a correction today, and because it went down. There's also corrections to the upside, where it had been lagging global M2 for a long time, so it has a correction when it shoots right back up and catches it. We kind of had experienced that just recently when it was down at 108,000, and now it's back up at 120,000. That's a correction to the upside, and you don't normally hear that term, correction to the upside. In fact, let's check the price right now. Still 120,000. Looks like we're going to be staying there for a while. All right. So because the money printing and global M2 growth is what fuels these bull runs, and all this time we've been waiting for the Federal Reserve to turn on their money printer and start fueling global M2. Really, I think that it's going to be the ECB that turns on their M2 right now. Because right now, the whole growth of global M2 is being done almost entirely by China. Because China's the only one doing quantitative easing right now. Soon, the Eurozone, the ECB, is going to have to do quantitative easing as well, because France is going to collapse if it doesn't. What's going to be the panic button response when this happens? Well, the French politicians are going to be scrambling like lunatics. The ECB's Christine Lagarde is going to be slithering into overdrive, and all the foreign money from DC to Tokyo is going to be watching. And who's going to be happy? Who's going to be miserable? Here's how it's going to play out. One groggy morning, the French are going to wake up. They're going to check their banking apps. They're going to pull out their phone, pull up the banking app, and then they're going to realize, oh my gosh, all that money I had in the bank, apparently it's not mine anymore, because capital controls are coming in and confiscation. Because you see, here's the real scary thing. It's one of the scariest things I'll ever tell you, is that there's no such thing as private property when the state is facing sovereign default. We call those capital controls. That did happen once in Cyprus. And you could there's a few other instances where else it happened. The most prominent one, though, was in Cyprus. Now, who's going to be happy? Is going to be the people that are... The next thing that a lot of these French people are going to do here after they check their balances on their banking apps is they're going to do a Google search, and they're going to ask, wait, why in the holy hell is Bitcoin worth $500,000? Because that would be the next move. I don't think it'll be 500,000. I think it'd be like 150,000 if something like that happened. Like overnight, Bitcoin go to 150,000. Because this is what happens when the ECB cranks out the money printers. They're going to be running them until the ink runs dry. And that's going to flood freshly minted euros into France to bail them out, just like how the U.S. did it with TARP in 2008. You remember TARP, the Troubled Asset Relief Program? I mean, back then, we were dealing with much smaller rookie numbers. They said it was $750 billion. And that sounded like a lot back in 2008. Now, those are rookie numbers. They're going to be doing a lot more. I'll tell you how much I think they're going to do over by the ECB in the Eurozone here in a minute. Let's talk about, why do they have to do this? All right, so crypto, for one, they're going to get stuffed like a Thanksgiving turkey with new euros and new dollars, new won, new yen. It's all going to get printed because, once one central bank starts doing this, other central banks are more motivated to start doing quantitative easing as well, because what they're thinking about is contagion. All right. And why aren't they doing it right now here with the Chinese central bank doing it? And that's because there's no disaster in China right now. There's no disaster that's causing China to do it. There's not a contagion to worry about. But in the Eurozone, France collapsing is a disaster. So why is it going to happen? It's got to do with geopolitics here. I want to show you a map of the Eastern Hemisphere, or the Eurasia zone. Here we go. We get a nice big map here. Let me show you guys this here. All right. I zoom in here. think looking at the world map here is going to really help you kind of visualize like why everything is going to happen the way that it happens. You see, you ever wondered why the United States has troops stationed in Germany and Japan? I mean, last I heard, World War II ended 80 years ago. So why do we still got troops in Germany and Japan? I'll tell you exactly why. The most unspoken goal of U.S. foreign policy and why we piss away so much money in U.S. foreign policy and defense and everything and have troops all over the world is we got to keep the Eurasia region from knitting together into one big empire at all costs. All right. Now, what's Eurasia? Eurasia is basically this region right here. And it's like you start here with Belarus, Ukraine, Romania, Bulgaria, and go through Turkey, Syria, Iraq, Iran, Afghanistan, Pakistan, India, China, Mongolia, Russia. And you do like a full circle. You call that Eurasia. All right. It's important for the United States to keep all these countries from uniting, because if they all united, they would outnumber us, and that's where they could really hurt us with things like BRICS, the BRICS currency. But the reason why we got troops on the sandwich side, kind of sandwiching in the Eurasia region, in Germany over here, and in Japan over here. So we're kind of watching from both sides this entire middle section here that we call the Eurasia region. Why do we do that? What are we so concerned about? Well, for one thing, like our biggest geopolitical foes are in the region. Because, here we got Russia, China, and Iran. None of them are our friends. None of them like us. I mean, they like our money. Absolutely like our money here. But what we can't allow to have happen is for those three countries to team up. You can think of it as a forbidden bromance. All right, no tea parties, no trade deals, no nothing. Not allowed to let them team up. Now, Germany is hunkered down in the heart of Europe, and Japan is an island fortress off of Asia's edge. So having troops in both places here is a really good way to keep an eye on what's going on in the middle here. That's really the majority of America's foreign policy, or at least foreign policy spending. All right, because you got America's three biggest pains in the ass, Russia, China, and Iran. They're stirring the pot. So post-World War II, the very last thing that America wanted to have happen was to have the Soviet commies in Russia rewriting the political persuasions of Berlin in Germany and Tokyo in Japan, because they didn't want the Germans and the Japanese to cozy up to Moscow and becoming communists themselves, because then the Cold War wouldn't have been a Cold War, it would have been a hot war. So the good news was that Germany and Japan, their cultures were very productive cultures. They weren't communist friendly. They weren't because you see, communist friendly cultures it's full of lazy people, is what it is. But the Germans were willing to work. The Japanese were willing to work like industrious ants, and they continue doing that. They'll be happy to continue doing that. But you get to a point with your country where you're working and you're working and you're working and you worked yourself to maximum prosperity. Once they reach that through productive capacity, they do the only thing that they can do next to grow, and that's go to war. And hence you had World War II. But Germany and Japan just so happened to lose the war that they started. Now, Uncle Sam was happy to tolerate the ex-Nazis and the Japanese imperialists and their holdouts keeping to their little corners and country clubs, because it was all a good way for the United States to cockblock the people's urge for a red flag revolution with the commies. It kept the U.S. rich, and because the U.S. was rich, even then the wealth was very concentrated in the United States even back then, so the rich in the U.S. and the elite in the U.S., what they did was they exported more American capitalism to the Germans and to the Japanese as a way to keep the communism out. And that plan was to prove that communism is this busted ideology, and that would also keep Soviet containment to the front lines of Russia, and we had these two nice little buffers on each side of it. All right? And how exactly did we do that? Well, we gave them a good old economic boost in the form of American foreign aid that went to both Germany and Japan. They got loans. They got goodies from the United States. They could rebuild the factories. They could ship cheap widgets back to the United States, and that way the poor in the United States wouldn't feel the full brunt of the inflation that America's richest participants were causing. But it gets better. You see, Uncle Sam would let them throw up a bunch of trade walls that were trade barriers that were bigger than even the Berlin Wall or the Great Wall of China even. The Germans and the Japanese had a lot of favorable trade barriers that they could put on their borders, and they became ground zero for America's endless trade vacuum and capital hoarding, and that's why you get iPhones made in Shenzhen. All right? And even now, in 2025, America's overseas troops in Japan and in Germany are the number 1 and number 2 spots on the list of where we got troops. They gobble up about 50% of all troops overseas. And this is on purpose because it's the U.S. saying, don't you dare consider communism. All right? Even 80 years later, both Berlin and Tokyo, and specifically their elites, their governments, became the biggest yes men for the United States because they do just about everything that we tell them to. All right? Even all that woke bullshit that we were doing under Biden, Germany and Japan were doing it too because we were. All right? And while they might grumble and complain about big, ugly imperial America meddling in their affairs, when it comes to like the real big stuff, they say, oh, yes, sir. Oh, yes, ma'am. Like good little boys. That's how they behave around America. And because of that, well, Germany has... both Germany and Japan, they have the richest net portfolio balance. And what we mean by net portfolio balance is, think of it like this. You ever heard of like the terms trade deficit and trade surplus? I mean, it just shows how many imports versus exports are coming into the country. If you got more exports going out, you're in a trade surplus. If you got more imports coming in, you're at a trade deficit. Well, net portfolio balance is kind of the same thing, except instead of imports and exports, it's measuring the country's investment in foreigners and foreigners' investments in your country. So Japan has a positive net portfolio balance, and so does Germany, because the United States was throwing all sorts of money at them. They basically rebuilt the countries that we bombed. So if you're familiar with trade deficits, the NPB measures the investment deficits or surpluses. And because of that, that's also why Germany was able to keep the Eurozone intact. That's why Germany has been the most responsible participant in the Eurozone to date. And that's why it is really going to be on them to determine whether they pull the plug on anybody in the Eurozone. But it's also going to be kind of like that prodigal son story, where they've been the good son this whole time. France has been the prodigal son. The good son is pretty resentful at the end of that story. It's just like, I obeyed all the damn rules here, and you're throwing a party for your little asshole son that ran away and spent all of his inheritance, spent all your money, and treated you like trash. So you know what? F you, Dad. F you. I'm unhappy. And of course, that's not the way that it went in the Bible story. But if I was the good son, that's exactly what I would have done. I hate that story, by the way. Absolutely hate that story. But Germany has had so much U.S. backing that it gave them a net positive portfolio balance that many other countries don't have, but they would love to have, because that is a highly desirable trait for the finances of your country. And that's what's made them the dominant force in Europe. And that's also what makes Japan a very dominant force in Asia, because Asia's got so many countries, really. You would think that China would dominate the whole thing and all the other countries around it would just be totally poor. And for the most part, that's true. Malaysia's poor in comparison. Indonesia, India, Thailand. I don't want to say it's poor, but it's very small. The Philippines is very poor. You'd think China would be poor as well. They had it the worst. They got nuclear bombs dropped on them, but they do very well. They have a positive net portfolio balance, and it's because the United States flows a lot of money into them. Now, what Germany and Japan do with these positive balances is they use that to invest in other countries as well. See, it's all just kind of like a trickle down kind of a welfare scheme where we loan to these poor countries and then they loan to poorer countries. All right. Now, talk about France here again. Macron, his presidency is in trouble in the sense of, like, you could say it's terminally ill because the ECB opposes every idea that he has. See, every idea he has, it's more welfare. It's a pretty parliamentary system of government over in, or it's close to a parliamentary system of government in France. But for the most part, like, all the domestic politicians in France are promising welfare to their voters to buy votes. And all of these promises get funneled up to Macron. Macron wants to fund them, but he can't. He goes to the ECB to try to get funding. And the ECB, ran by Christine Lagarde, says, oh, heck no, you guys are the most irresponsible children in this entire Eurozone. I don't want to give you any money. Macron can't pass a budget. Two prime ministers before him, or the two prime ministers that he worked with previously, failed to pass a budget. And Countess Karen over at the ECB refuses to support France's bond market by printing euros. She has been very hawkish. You think Jerome Powell's bad? Christine Lagarde has been worse. She's been absolutely hawkish when it comes to rate cuts and when it comes to the money printer. See, the domestic politics on both the left and the right in France, they're both going to be promising more money and spending more money than they take in taxes. Like, austerity is never going to happen in France. As I showed you all the welfare, there ain't no way they're getting rid of that. So the French budget deficit continues to grow, and there's no willing foreigners anymore, such as Japan, such as Germany, to invest money in France. In fact, capital is leaving France. So it's a really big problem for them. How big is this problem? I do got some figures here to show you that illustrate that. Let me get back to some notes I had earlier. Where is it? Here it is. All right, check this out. So 25% of all EU issued securities are French. So that's a big chunk of the Eurozone. One whole quarter of the Eurozone. The securities that are issued come from France. But half of those securities, 12.5%, are not owned by the French. So you see, France is very dependent on foreign capital. 27% of all bank debt in the Eurozone is French. Half of that debt is owned by non-French foreigners. 39%, this is the big one here, 39% of EU non-financial debt is French. Almost 20% of that is owned by non-French foreigners. The only reason France is standing is because of foreign investment. If the foreigners decide they don't want to invest in France, as they're deciding right now, France crumbles, and then the whole Eurozone could crumble too. How bad is it going to be? I got some more numbers to show you how bad it could be. And this would be like the biggest story on every news network. It's worse than the great financial crisis, I think. It goes like this here. You got to bear in mind that there is a capital ratio that the ECB uses. So I go, right now, on average, all of the French assets and debts are going to make up about 15% of the Eurozone. And because of their capital ratio, if they were to lose just 15% of all that, if all the foreigners pulled out and stopped investing in France, this could cause an 86% decline and erosion of the bank money or bank capital at the Eurozone. And that's just because of capital ratios that they use at the ECB. So that means we would be going from a capital economy that has $5.83 trillion to an economy that has less than $1 trillion. We just have $800 billion. Imagine that. 86% of all the money in your economy gone because foreigners pulled out. All right. It's like, I mean, there's a lot of derivatives based on this capital that are out there that kind of add to the M3 supply, the M3 money supply of the Eurozone. So that would also be wiped out too. This is how delicate it all is. It really is a house of cards. And this is assuming they just take out 15% of French debt. And if you take out more, I mean, imagine they could take out a lot more. But if you take out just more than 20%, you've wiped out the entire Eurozone as far as their banking system goes. So in order to fix this, what the EU would have to do is they would have to print a total of 5 trillion euros. 5 trillion euros is what they're going to have to do at the very least to save this. So if you're printing 5 trillion euros and that goes to bail out France, that money now needs a place to go. Where is it going to go? It's going to go into financial assets. And which financial asset is the one that is the least liquid and is the most reactive to new capital additions? Crypto. What crypto is the least liquid and has the greatest reactions to new capital additions? That is the pulse chain ecosystem, and also HEX. That's why. So that's what the point of this chart here is to show you, is just like how tragic or how disastrous it would be if we lost just a little bit of money from French foreign investment. All right. You got to turn on that money printer over at the ECB in order to fix this. That's the only way. If I was Christine Lagarde, I would be printing right now to prevent this from happening. Now, of course, they can't do that because if they did, well, that's just going to encourage France to be more irresponsible. Now, who holds the majority of the French debt? Germany and Japan. Are they just going to sit there and take the loss and take it up the butt when France goes down the drain? No. They're going to pull their capital and they're going to flee. And if they don't do it in time, they're going to put political pressure on the ECB to bail out the entire country of France. And what does that do for the rest of the world? What about the Federal Reserve here in America? What are they going to do? The magic word is contagion. Remember when you heard that word over and over again when FTX collapsed? It's a real problem. Now, thankfully, we didn't have too much contagion to worry about back when FTX collapsed because it was a centralized exchange. It didn't really affect DeFi. But that's not the case here. This is a highly centralized system of several economies all dependent on each other. We're talking about mutually assured economic destruction. In order to prevent contagion from coming over here in the United States, the Fed would probably have to turn on their money printer too. I don't know how much they would have to print, but I imagine they would have to print a lot. And also, why let a good crisis like this go to waste when you can synchronize all of the money showers, right? You see, French capital got the memo. They got the memo already, and that's why they're bolting. And that's why the target torpedo is speeding up, which was this chart over here. What this chart shows you is capital is fleeing France. Now, I'll talk about some numbers and how this affects crypto. We'll get to that here in a moment. But first, a little public service announcement. You're listening to a Reinvent Ideal live stream. The phrase Reinvent Ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map. All right, so we want to talk about what does all this mean for crypto. And that's what this chart's going to show you here. Let's talk about like some real numbers. Like how much loot do you think can really leave the French banking system? I mean, as of the summer of this year, their domestic deposits are about 2.6 trillion euros. Those are going to be your average household and a lot of corporate treasuries that make up that 2.6 trillion euros. The regulators, I don't think they're really paying too much attention to the possibility of there being bank runs because they can happen really quickly. I mean, just the banking apps that everybody uses, they make the panics ping faster than a right swipe regret on Tinder. That's how bad it is. Yeah. Suppose that just 25% of that 2.6 trillion disappears in one day. That's 650 billion euros in one day. That's enough to give the ECB a heart attack. What effect does that have on the overall investment market, and what effect does it have on crypto? Well, here we got some charts here that just show us what effect it's having right now. I mean, for one here, look at that white line down at the bottom. That is the Euro Aggregate Bond Index, which has gone down because bonds are in a very long bear market. Nobody wants bonds. Take a look at the yellow line. That is the Euro Stoxx 50. Not quite the S&P 500 of Europe, but more like, the top 50 companies out there in Europe. It's done okay, but really, it's only gone back to where it was before Liberation Day. It hasn't exceeded it. Because you see this dip right here? This was the Liberation Day dip that happened at the beginning of the year. So it's really not doing all that great. It was doing up to here, then bloop, and then it came right back to where it was and hasn't really exceeded it much there. The green line, you know what that is? That's gold. Yeah, gold has done very well at just the rumors of all this going around. But who's the real winner? You guessed it. Good old Bitcoin. That's what this pink or magenta line is here. This is Bitcoin. It's not really pink. It's kind of like purplish pink. So imagine when all of these fears become realized, and this becomes not just a possibility, but a reality. This actually takes place, and the ECB has to step in and start printing euros to bail them out. They haven't been doing any quantitative easing, much to, depending on your perspective, much to Christine Lagarde's credit, because check this out. This is the strength of the euro against US dollar bills. Remember when I showed you earlier how, the US dollars, the DXY had been going down since the beginning of the year? This is what the euro had been doing since the beginning of the year. So the reason the dollar is weak, it's not because of inflation, and it's not because of money printing here in the United States. We're not printing dollar bills. It's because the euro is doing harder, more hawkish quantitative tightening in the Eurozone than we are doing here in the United States. They are doing stronger quantitative tightening at the ECB, reducing the supply of euros faster than we can do quantitative tightening, reducing the supply of dollar bills here in the United States. That's the only reason the US dollars have gone down, is because the euro has gotten stronger. The DXY is a comparison of the strength of the dollar against other currencies, a basket of currencies. A big piece of that basket is the euro. Since the euro got stronger, the dollar got weaker. Now, dollar getting weaker in general is good for crypto, but it would be a lot better for crypto if both the dollar and the euro got weaker at the same time. And also the Japanese yen and the Chinese yuan. Chinese yuan is getting weaker, but the Japanese yen, that's still pretty strong. The euro is getting stronger. They can't keep doing this. They cannot keep doing this over in the Eurozone. It's not going to last very long. So here's what's going to happen here in the euro. France is going to collapse, and they're going to do capital controls. They're going to confiscate money. They're going to just take people's bank accounts. They'll start by taking foreign money. That's why a lot of foreign capital is fleeing France, because they know that the foreign investors are the first ones to get screwed when the state is facing sovereign default. So capital controls will come in, and then there's going to be runs on the bank by everybody, and the only way that you solve it to keep the entire Eurozone from collapsing is the ECB has to print more euros to basically flood the system with more capital. Because basically what's happening is there's a leak in, imagine like a above the ground pool. All right, and you're having a really good party. Everybody's having fun, and I mean, it's an orgy. Matter of fact, everybody's in there skinny dipping and having all sorts of sex, and it's all hot people. It's no gross people. So you have all these hot people. It's like a college spring break at an above the ground pool party. Everybody is in there skinny dipping and getting nasty with each other, but the pool is leaking. All right, the pool is leaking, and then more leaks start to pop up. All right. Christine Lagarde is running around sticking her fingers in all of the leaks, but she's only got 10 fingers. So she's running out of them. And then those leaks are becoming more plentiful, and they're getting bigger. And because they're getting bigger and more water is leaking out, the only way that they can keep the party going is to go get the hose, and like a really big fire hose, and flood the pool with more water, or in this case, money. And that is going to keep the show running. That's going to keep the Eurozone from crumbling. I mean, they're still going to have to deal with this problem later on down the road. They're never going to escape this problem. But that addition of new money will be like an addition of new water from a hose to a above the ground pool that can keep the party going for a little bit longer. And as that party's going, that is where you see $150,000 Bitcoin. That is where you see $20,000 Ethereum. That is where you see $7 HEX. So that's where those numbers come from. And it's because it's not just a hose from the ECB. Because you see, over here in the United States, we're throwing a pool party here as well. And we're going to be like, oh my gosh, what if we have leaks in our pool? We better bring out our hose and start filling it up. That's how it plays out. All right. So now let's get into the questions. I know there's a bunch of questions here from everybody. And everybody throw them in here while you got them. All right. What do we got here? I know I've seen some. Oh yeah, here's the first one was from Kirill. Did you hear Trump thinks about giving economy checks $2,000 to citizens from tariff payments? Money gifts like 2021. Could happen. Here's the deal. I did have a little bit of a debate about this with Crypto7 on his channel yesterday. The first thing that's got to happen is the Supreme Court has to rule whether the tariffs are constitutional or not. Because if they do rule them as unconstitutional, they're going to have to refund all that tariff money. You don't want to send people a whole bunch of money from the U.S. Treasury General account and empty out the Treasury General account by sending them a whole bunch of checks. And then you're going to have to recall that money. You're going to have to confiscate tax returns because all the money's going to have to go back. Now, I don't think it would actually happen that way. I think what would happen is if they paid you the Treasury money now in the form of these checks and then the tariffs got ruled unconstitutional, I think then they would have to turn on the money printer to pay back all of the tariff money. But what's going to happen, though, is first they're going to I should put this on the screen here so everybody can see the question. What's going to happen first is they're going to wait for the Supreme Court to rule on whether the tariffs are constitutional or unconstitutional. And then after that determination is made, then they may do this $2,000 check from all the tariffs. I do think it's a possibility that it happens here, though. It just depends on how the Supreme Court rules. And I don't know, because their job is to determine what is constitutional and what is not. And according to the Constitution, only Congress has the authority to determine taxes, to set tax policy. And you could argue, if you're a really good lawyer, you could argue that the tariffs are just another form of taxes. All right. Checks my pulse says 100-year chart shows good for 2026. I think you might be talking about the Benner cycle because, yeah, the Benner cycle says we go into 2026. All right. And let's see here. Next question here is from Jim Horton. He says, if the U.S. doesn't turn on the money printer until summer 2026, so you think the RH ecosystem could still do a 10 to 20x by the end of 2025? I don't know. I think HEX will continue to outperform everything else. I think most altcoins in general are going to have a very difficult Q4. All right, before 2025 is over, the crypto market as a whole will have a very difficult Q4. I imagine a lot of heavy resistance for Bitcoin itself. I said this on yesterday's stream as well. And it's because there's just way too much uncertainty that is not going to get wrapped up this year. Uncertainty about Lisa Cook. Is she in or is she out? Do we finally get rid of her or not? I hope we do get rid of her, but we don't know until the oral arguments are presented in January. So that leaves us with all uncertainty for the rest of this year. Sucks. There's also a lot of uncertainty about the tariffs. They got to get ruled on. There's a lot of uncertainty about the wars that we're fighting in. Because there's a peace deal between there's a peace deal for the Israel conflict that's out there that the U.S. and Israel have agreed to, but has the enemy agreed to it? We don't know. I mean, I can't find coverage on that story anywhere. There's uncertainty about Russia-Ukraine going on, too. Because, yeah, there's a deal that the United States is trying to get everybody to agree to, but will Russia and Ukraine agree to it? We don't know yet. There's uncertainty about France right now. Until they turn on the money printer, that uncertainty is going to stay until the ECB turns on their money printer. So I do see a very difficult Q4 ahead of us, even though today was really good. And the day yesterday was a very good day. We'll have good days. We'll have some bad days too. There'll be pullbacks. That's not me being bearish. That's just me being realistic. So I mean, when I say this doesn't start till 2026, and it doesn't start at the earliest halfway through, don't interpret that as me being bearish. I'm not bearish on any of this at all here. I'm very bullish. In fact, I think it's more bullish to say it's going to take longer because that means that if you call this a bull run right now, the bull run lasts longer. So I don't foresee anything doing anything amazing until after the year turns over. Because you got to remember, a lot of people are still bought into the 4-year cycle, and they're going to stick to it, and they're going to look at their portfolios and be like, man, it's the 4th year in the cycle now, and we haven't popped. I guess the cycle's all over. And they're going to sell. There's several coins right now that are not in profit. The majority of all the coins out there are not in profit. And a lot of people are going to sell for tax loss harvesting. That's going to give us a very rough Q4. And then when the year turns over, come January 2026, it is a good tax. It's a new tax year. And all the coins that are in profit, people are going to sell and push those prices down. Because they're going to be like, hey, you know what? The 4-year cycle's over. It's time to sell. That's what's going to happen. It'll be probably a very difficult Q1 of 2026 because of what everybody is thinking is, oh, the cycle's over. It's time to sell. When really the cycle never finished because the bull run never got started. So that's what I think about that, Jim. Next question comes from BB. Thoughts on 9-inch scammers? I don't pay attention to meme coins. I don't really care for them. No hate on meme coins. In fact, I got nothing but love for Hexy Bastard. He's a great guy, but I don't play with meme coins. So if there's a bunch of scams on there, I'd say, well, yeah, you shouldn't be investing in those meme coins anyway. No hate on you if you do. If you want to invest in meme coins, go for it. When they turn the money printer on, all the meme coins are going to pop too. Every coin is going to pop. You'll make money with meme coins. I just don't recommend them. And the reason why is because by the time you hear about a meme coin, it's too late. You don't hear about it until after it's popped and it's gotten the majority of its gains. And then when you go invest in it, it's got just a little bit more gain left. Then it starts going down and it never goes back up. There's very few meme coins that ever had a repeat of a repeat momentum. Very few meme coins that ever had a double top. Very few. All right. Any other questions we got here? Tablarus asks, so is USA Fed going to be last to do QE? Possibly. I mean, here's the way it plays out. Scenario number one, we get Lisa Cook out. Trump gets one of his guys in. They control the board of governors and they control the FOMC, and that turns on the money printer. The earliest that happens, though, I think, is June 2026. Worst case scenario is that we never get Lisa Cook out, or we don't get her out until late next year, after the midterms, and the Democrats block every single person that Trump tries to appoint to the Fed. And then the money printer here in the United States doesn't get turned on until money printers over in the ECB get turned on. And we're doing it just for a contagion. So still, we get our money printer turned on. That's good. But I don't think it'd be as much as like it wouldn't be as much as, say, a Trump-dominated board of governors and FOMC would have. All right, I think that's all the questions that we got there. So everybody, what I got to say to you is this here. I know it sucks to have to wait, but you're not wrong for waiting, because the forces that are governing this space are going to cause the money printers to get turned on, at least at the ECB. I don't think there's any other way they can save France and save the Eurozone unless they turn on the ECB's money printer. I think it's unavoidable. And yeah, I say that here about the United States as well, that it is unavoidable. They're going to have to do it at some point. It's going to be a tougher fight here in the United States than it is over there. Because over there, they got an emergency. We don't have that many emergencies over here. In fact, we don't even know what kind of economy we have here in the United States. I was looking at the GDP by state, that story at the top of the hour, or top of last hour that I showed you. Real GDP growth by state. For Q1, this was all red. Now it's all green. How in the heck does that happen? How does it flip? What's the next quarter going to show? The next quarter is going to be a very interesting one, because that's going to tell us how good our economy really is. And we really can't tell from looking at the first two quarters here, just because of how confusing the how to be a professional. Yes. Hopefully everybody can hear me now. But that's what I've got to say today. So sign up on the Substack and get a free copy of my book, Your Parents Were Wrong, and also check out my book, Decrypting Crypto. Because if you you just go over to Amazon and you just read the free sample of it, and then you go see me when I'm on other people's streams, and you get your chance to win a free copy of that book. That's all I've got to say for today, everybody. Cairo out.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong. debunking and replacing outdated advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up.
I don't think you're a bad person.